8:25 a.m. Pacific Standard Time, 6/1/2003. June 1 is the key. Weekly chart reversal on the S&P 500. So, for our MMT management market makers, what it really talks about in the price and shows in the price is that the broader equities are also, that's the ones that are key to the S&P 500, they're selling short on their highs and coming down. Where the prior part of the year, when we started it and we're in the half year, so the easy money's been made in equities. And at some point, the whole algorithmic programs that were used in calendar 2013 in the high frequency index model, those are where machines, supercomputer machines, buy the broader part of the S&P 500, so they all move up and they keep moving up. And that's over a lot of people's head, but the MMTs understand it. So what do we understand? Price reversal, week 1, week 2. That first week over here on the jobs report, they came right back in and they rallied it and kept rallying it. What is the difference? This is the 13th year since the bear market started when I was shorting it in March of 2013. What it means is that those high inflated prices back in 1999 and 2000, early part, and even when the big breakout started in 1998, we have something very similar here as to what was happening back then, MMT, on the S&P 500 weekly. That means that the call side of the market paid monumental amount of money. Now the put side, for the first time of this calendar year, is getting some entries and exits with profits. Where if you were doing that over here, you get killed because it's rallying up. But now it's the first, and we're going into June 1. And the last 13-year period, which is this period, but let's say we'll just go where the consolidation really started, and those were those dips in 2010 and 2011, and how they continue to make higher highs. Now, if you want to get on board and you want to understand how to be a market maker, how to be trained as one, how to receive dollars to your account for intraday buy and sell, with all of our back-end management to go along with it. So we're going to come down in the S&P 500 on a weekly level. The rising 10-week moving average here has been rising all the way up from the breakout period. And you can clearly see, this was January 2013 right here. But it started back over at the calendar end of the year. And everyone knows what they were doing then. They were in their doom and gloom and everything bad. But look at the tape, how they took it up. This is a weekly level. Look at what was happening in February. You had a couple of little dips. That was early on in the move, but you continued to go higher and higher and higher. Now, we are in June 1 period. Half the year is upon us. It's very important that the price reality and directional price movements only are clearly understood for making the market maker transaction and then receiving great positive debits. We can clearly see here on a daily moving average of the S&P 500 where that volatility top was. That was the blow off top that we all went through. And yes, and then you bounce to a lower high. But nonetheless, look, they're selling in to the rallies. They're not continuing to break daily highs on the S&P. It's pulled back. It's tested the rising 20-day simple moving average. And they bought the dip. But you can see here on every little reversal, you still have where that high reversal, a high reversal. So on a daily 3-day price action, you have 3 days where you can sell equities that are in the S&P 500, the leadership only. When to go down here and do all of this, that means that the top leadership of the S&P 500 stocks were selling off at their resistance level. and you can make a transaction and be positive. You can have positive, nice debit under our management, knowing how to do that. So you make a lot more, and yes, you can make a lot of money if you wanted to buy and hold something all the way up there, but that's not what it's about. You make a lot more money doing it this way. So here's the thing. We're testing it. And take a look. The high, we're going to get these numbers where it was very narrow range, but we're just going to let you know that these reversals, if this is going to reverse, then we make the transaction debit in the broader part of the S&P 500 of the high beta stocks for reversals because they pay. Period. I'm just going to briefly show the MMT, a 15-minute chart of the other day of that 1650 area where we broke down where my pointer is. That was clean on a 15-minute. So that meant one thing and one thing only, MMT. When you're using your intraday buying power, your capital that you're getting to make these transactions, is that 1630 is the last print down here. Now, on a 60-minute level MMT, well, let's let you see the 30-minute level. Look at where the reversal started here. Then they came back in on the bottoms, and the high-frequency machines had a buy program, and then gapping them up to a blow-off top high, and down you went. These are counter-rallies, MMTs. So that meant one thing. The shorts were having to buy to cover, and equities went higher, but they only went up here to 1662. They didn't even come back up to the 1674. We're using that one right now. It was much higher, but this is where the progression of making another high. But look at that 30-minute reversal. So the S&P 500 broader stocks were selling down too. And so when we're getting our market maker transaction short and we have things like this working for us, that's the way the price is going to print. On a short-term level, these are just buy to cover. They test support, they come up, but they make lower lows. Look at the lows have gotten a lot lower. So having said that, I'm going to go to a 60-minute chart. Here is a 60-minute chart versus those other ones. But look at the 60-minute bars on certain days. Look at the counter rallies. They fell. And then we make the lower low where the trade is. These are simply people that are buying to cover their short interest intraday. You get these pops. They fill up the half bars. They do not close above the half bar resistance in price. MMT. And all the MMTs that will be current, this is what you would be looking for when the price is actually printing in your favor, as it really is mathematically. What I've decided to do, naturally so, is pull up the MMT Market Maker application. It's not a normal charting app, it's only for them, but it's very clear about the top reversal. And each one of these moves on the daily chart of the MMT, each one of these lines are $6.65, period. So, mathematically, my friends, we have where this whole breakout here, every one of these daily little breakouts back in here, this is where it started right here. Back up to make that higher high. And on the daily, we can clearly see if we get into here, that when we were up on the S&P, that's this high. Let's go ahead and say where that high reversal is in our platform. There it is. How about that? The half bar was 1668 right there. And the high was 1687.18. That's the reversal to 16. Well, let's take a look at the intraday low. How about that? Okay, 1630.74. That was a 28.25. So that was a 28.25 reversal. If you understand clearly that each line is $6.65 to the penny, in our MMT platform. This particular reversal is the mid-year very top of that price channel. Now it's a question of where the pullbacks are going to come into play. Now, I do have a private analysis report that you can purchase. It's about $5,500 for the calendar year, but nonetheless, you get 4 quarters in that. And what it's going to do, if you are involved in the markets, doing your retail trading or whatever you do, well, then at least you're going to know where everything is. So, once again, that is up to those individuals. Think about it. If you knew which way the market was going, you'd be making lots of money. Plus, you'd be knowing where to sell out. So, here, let's just talk about the reality and the price and the reversal. This bar right here, daily bar on Friday, was $28.25 from the top of that teeny line down 2 1/2 deltas in the system MMT to this first area of diamond support at this top. So in your market maker application, naturally, when we close down here, we're closing here, but technically a half a delta down to support is going to be 616 MMT. Period. This is a standard daily chart, 60-minute or a daily. If you look at a daily chart here, how are you really going to make any decisions? It's just a chart. But when you look at the SMF MMT platform daily, it has all the math to the penny and what each value and price, the value of the price. The reversal, look at descending is how you make money here to support. Now, when we start off June, today is June 1, it is calendar 2013. Our lowest support level here is going to be right around 1620, period. So, if we break to a full delta on the S&P or 1.5 delta down, which is 42 handles still lower within the price volatility, we said a week ago, or the last update, is that price volatility was going to be here and how to identify price reversals mathematically. And, so it's a bull cycle move. It's taken 13 years to get a move where a market versus, so what is bull and what is bear? And, bulls bounce and make higher highs, whereas bears, when they get to support levels, and those bear markets that people were in for 12.5 years, is that you never had the bounces and the higher highs. They were always reversals and making lower lows. There was no real strength. I just want people to understand that this is the top, and this bar right here, reversal, was 28.25. This bar reversal, the day reversal on this one, let's try to find it. Take a look. $30. $38.32 right here. So what does that mean when you're looking at an exhaustion price high between high algorithm machines and public, whatever you want to call it? Markets are electronic these days. They're not like they were 10 years ago now, or 5 years ago even. But particularly, there are algorithms that push these things higher. And when those algorithms get tired, look what happens. You start reversing half deltas in the MMT platform. That, again, mathematically, not opinionally. Because look at, if I'm looking at this, look at here. If I'm looking at this regular daily chart right here, it doesn't give me the value of these moves and what the volatility and why would you make lower lows from this support level right here where it fell through. This is the value of that support level. And it sold down. We're going to tell you that the real test is going to be at the MMT half bar right here. Because you're breaking below the 20-day moving average and the 10-day simple moving average. We put them on there so people can see what they look like. That's what the public would look like. Look, the dollar and price is there. And it broke the support level right here of this last high reversal on a daily in price. So that means that every time we go up to resistance, price will be what? Weak. Okay? We're going to measure where we had daily reversals back on this date, back in, and this was in April for, no, let's see what date that was, 4/12. But notice that the pullback, they were still in this breakout, mathematically ascending, testing support, the bull going higher. It did not sell down through there. And then you could consolidate, and then the pullbacks would come and you would make the higher highs. That is what a definition of a bull is. Whereas the definition of a bear in the last 12 and a half years is when the investors' prices got to a certain support level, they blew right through them and went down, and took all of their money during those time years and those price action frames. That was happening. I just want the MMT staff to be very clear on one thing. In the market maker division, where you're making your transactions and you're getting that intraday buying power, is that definition is here mathematically. But what I'm going to tell you is that we're going to have support down here. And it's going to be at, let's take a look. Half bar is going to be 616.19. Let me blow up in the platform for the other MMTs is this half bar here in your market maker platform where you make your decisions in directional price breakouts and or reversals, that the broader part of the S&P 500 stocks, not the all, I'm talking about the high dollar leadership ones, is the ones that we sell short transactions with their intraday buying power, because prices are failing. Every time we've gone up, look, we've made lower lows. That's from the initial high. That's the second high of that reversal. That's number one. Here's number two. And really, number 3 and 4, I mean, mathematically, you could see that he kept breaking these diamond support levels right here, MMTs, on a daily level. And 616.60 is that new top end of that resistance. And now, listen, the bull is still very strong. So we've had these reversals. We do understand one thing, that each line is $6.65 on a daily in price. And we had 2 1/2 of these. We had one full delta reversal here. And so that's 665 times 2. 665 times 2. There it is. So, moving forward, the lower that we go in the short term, we're going to get some good bounces in there, but they will have to, the transaction debit in the MMT market maker division is that you'll make that debit and you'll take it right up to that next reversal and get out and get right on the other side using put options and making that money. I didn't stutter. No, I did not. In directional price movement. The market maker is not a retail investor or day trader. Any of those people are not even like institution. No. We do things differently, and everything has mathematical resistances and supports. Doesn't matter what frickin' time frame it's on. They're right to the penny, and so is a market maker. This is what we have going on for the public. This tracks the algorithms in the broader markets mathematically. So we always know where we're at. It's not based on opinion or what if, as far as directional price movements are concerned. So reversals are reversals. And they're in a bull rally. They're not in the old bear market where they would just, yes, they can come down gradually all the way back down here, because these are lower support levels, which would be healthy. 1687 and shaking everyone back down here to 1550, 15 and a quarter, or that would set up a new rally on the S&P, and a fortune would be made to the upside. So this lesson right here is for the market makers that are actually making a market with capital intraday, to understand that the broader S&P leadership stocks that have a high-low range, you have to have the high-low range of the individual equity, selling it, they're selling in their highs to cause this chart to go this way. Then they've been buying certain ones, they've been buying dips. But guess what happened for the first time? The dip filled, didn't make another high. So June 1, 2013 is going to be very important to understand why you need to make the transaction that's going to put you on the side that pays you your dollar debits. And the reason why we're looking at the S&P 500 and what the monthly students are doing, why they're making those transactions, is that they're going to understand that the individual name in the S&P 500, the leadership high, low range beta, is at least $3 to $5 now. Is that those names we would be making short sells. The risk is lower than any other time of the year. Because when we were rallying back here on this daily, you didn't want to be short. No way. Every time they started to get a pullback, it was just a consolidation of this last half a delta breakout. That's an expansion in price. Then you go up another 2 half deltas, which is 1 delta. These are where prices were expanding to that very high reversal. That was the end of it. Look at the dollar price drop. Look at the support levels going into Monday. This is where we're at. This particular time of the year, the reason why the video is this way is so that every new MMT that wants to either sign up or see what we do, this is the one they're going to watch. This is the half point of the year price reversal to support levels within a broader bull rally market that has been broke for the first time. What we will be doing on the daily level is measuring that price resistance and how support levels hold in price. Because I will tell you, if the broader names are selling at their support levels, and of course this index is going to go lower. So first area of support is going to be right here where the breakout started in the MMT platform. It's going to be this teeny line right here. Right here. Right below 1620. That is going to be another half delta, another delta down. And 1 delta value in our platform from the current level would be exactly 1602 on the S&P 500. At that point, either prices are going to get weak or the rallies are going to be bought. MMTs. The new MMTs that sign up after this day, you will go back to this calendar day and you will understand how the S&P had its first yearly top overextended. The values have come down. Once you get into our program, you're going to be watching this. You're going to be doing these prices daily with individual equities. You will get intraday buying power and capital to trade with. You will sign up for the free 5-day trial. So every new signee will go through this 25-minute video. It's 23 minutes long. And understand where directional price movement starts to turn in the algorithm versus the algorithm breakout in high frequency trading technologies. But then we cross the market. There are software programs that are involved in the buy and sell tape. So go watch the Ghost Exchange. It'll tell you there. So that's a full reversal. So this support level in the very short term starting Monday trading is either they're going to start a gap up on Monday. They've had 20 weeks in a row on the S&P 500 where it closed up 20 weeks in a row on a Tuesday. And this is very true. So I'm going to leave everyone with their thought patterns that are in the MMT program and intraday as a market maker, what side of the tape you clearly want to be on. And how the math doesn't lie to support. 1 delta down. And each one of the lines are that value. So if you go from here, 1, 2, 3, 4 half deltas equal to 1 full delta reversal in the broader S&P 500 index to support levels starting on a Saturday, June 1, calendar 2013, and price volatility, guess what? MMT, the price volatility, is going to stay here. And that's what markets are about. The easy money's been made. They're going to go up to resistance. The July quarter and earnings are not going to be, in fact, they're going to have to stop cooking the books. But I'm leaving everyone right here at that support level on a daily for new MMTs. Mid-year update, June 1 from first day of trading in January to closing bell of calendar May. But today is June 1, and we're starting June 1 right here at this support level where we got to break out to that last high. We're going to see how they come in. If there is a half delta reversal up to resistance, then we will get net long equities off of the bottom in your market maker application intraday, and you will receive your profits. Mid-year update.